Thinking about buying a condo or a townhouse? Wait before you buy. I'm going to share with you 10 tips that could save you thousands and thousands of dollars. Let's make a smart decision and a smart move together. A lot of people like to buy a townhouse or a condo because in general it is cheaper than buying a house, and that's the number one reason they make that decision. The second reason they buy a condo or a townhouse because there is no exterior maintenance. So all the time if you buy a house that you spend fixing up your outdoors, you save all that time in a townhouse and you could use that time wisely doing outdoor activities or things you enjoy rather than digging your lawn up, etc. Going back 20 years or so, when I bought my first condo, which I could barely afford, I did not know what I was getting into. And I found out after I moved in that there were a lot of restrictions, regulations, and things I could not do, not only with myself and my parking, but also with my kids. So let's check out these 10 tips. Come inside. So let's kick off with the number one thing about HOAs, and that is how much are the HOAs and what do they cover? As you know, each condominiums and townhouses have HOA fees, rules, and regulations. So the first thing you want to find out is how much are the fees? Can you afford them? Because that will affect your affordability. Those expenses, the monthly HOA fees, which range anywhere from $100 to up to $1,000, depending on where you are, they do get counted in your mortgage application and mortgage qualification. So that's the number one thing. But you also want to know, what do they cover? What kind of common area maintenance do they cover? They all do the exterior, but you want to know exactly what they are covered and what you have to do. The other thing you want to know is that what do they include? Do they include trash? Do they include utilities? Do they include internet? Some do, some don't. Most don't, but each one is different. Each state, each county, each city has different regulations. So check it out. Just because you buy into an HOA and they offer a tennis or swimming or a clubhouse or a pickleball does not mean that you are going to take advantage of it. So just because they have those things, you may not use them. So be careful and make sure that you are okay with paying the extra $300, $400, $500 a month on HOA fees if you're not going to use some of the amenities. So it's a pick and choose kind of situation. The second thing you have to understand is the importance of the reserve fund. Each HOA is required by the state regulations to have a reserve fund. Let's say there's an emergency, there's a roof started leaking and it's going to cost $10, $20, $30, $50,000 on these units. Do the association have the reserve funds to fix it, which is coming up every month from your fees that you pay? Or they don't have the reserve funds, now they have to fix this emergency situation and they're going to charge you with an assessment fee, usually a monthly fee or a one-time fee depending on the emergency that they have. So look into these funds. It is very important that all the HOA, good, reasonable, and good operating HOAs, which in terms is the community of the association, has those reserve funds in there. You're welcome to check those before you sign any papers. The other important thing, and that's why I'm calling it out up front, is that before you sign the papers or before you decide to buy in that community, make sure you check how much are the HOA assessments coming up. Are there any assessments coming up? Maybe there was a situation a month ago, 2 months ago, a year ago, and the city or the state made them do all those things because there were safety issues. So now they have an assessment coming up in the next few months. So are there any funds? Are there any assessment funds? And are you okay to pay with those funds? To give you an example, in California, there's a new regulation coming out for all those multifamily homes, all the townhomes, all the condos that have decks, wooden decks, and if they are above 6 feet, now they have to be assessed structurally. And if there is any issues with those, they have to be fixed. So now this is a brand new rules and regulations, at least in California. And if those decks are old and if those needs to be fixed, they're going to assess you with fees on there. So it's important to know your assessment fees coming up, or if there are some already in place coming up in the next year or the next 6 months. If you have looked into buying a condo or townhouse, have done any research, or if you're a realtor or an agent watching this, please comment below what are some of the things we have to look out for that we can share with other viewers like yourself. I would really appreciate it. Each HOA has rules and regulations, what we call the CC&Rs, covenant, conditions, and restrictions. So before you sign into those contracts, before you buy that, make sure you look at all those rules and regulations. Obviously, there's lots and lots of regulations. In fact, when I bought my condo, they gave me a stack of papers. I never looked at that, but I asked my realtor at that time and also the escrow officer and other people, what are the main restrictions that applied to me? For example, I had a car that I wanted to park outside on the street, not in my garage, because I wanted wanted to make my garage into a playroom for my two little kids at that time. And there were restrictions on parking. So I knew that up front. There's also restrictions on pets. If you are a pet owner or a pet lover and you have a big dog or lots of pets, a lot of the associations don't allow lots of pets. Maybe you can have 2 per unit, or they might have a restriction on a 50-pound, 60-pound max, etc. So there's a lot of rules and regulations. Always check those CC&Rs thoroughly, especially at the things you are enjoy doing it and you may be restricted. The other thing is, I had a friend of mine that I was going to sell a condo to 5 years ago, and he was a mechanic, and he did repairs as a mechanic on the side in the weekends to make money. But we found out that association does not allow that. So we did not buy a townhouse and instead bought a house for him so he could do repairs as a side hustle. Very important to know all these things. What kind of amenities does the association provide? Do they provide a pool? Do they have a clubhouse? Do they have tennis courts? Do they have pickleball courts? Do they have basketball courts? Do they have a swimming pool, a spa? Some may offer some of it, some may offer all of it. The question is, if you're not going to use the pool or the tennis courts or the pickleballs or the clubhouse, is it worth for you to pay those extra fees, HOA? Maybe you want to find some other community that has lower fees and you don't have to pay the $500, $600 a month fees, and you're not going to use any of these. So you may want to find something that does not have all those amenities and their HOA fees are lower. There's a community in Irvine, for example. It's a gated community. They offer laundry service, they offer concierge service, they offer food, they have a rooftop and all that. Very nice. HOA fees are $1,200 a month. Condos are very nice. My niece wanted to buy a condo there, and I told her that, can you pay $1,200 a month? Are you going to use all those things? And she said, heck no. So we didn't buy that. And I saved her a lot of money, because if she would have bought it, she was really stretching to buy that. And of course, at that time, those condos were going for $700,000 each, brand new in Irvine. Now those condos are worth over $1 million, and their HOA is over $1,500 a month. So check out those HOA amenities that they offer. And if you're not going to use them, you may not want to pay the extra HOA fees and find something cheaper. On a side note, at the end of this video, I'm going to have a link on your top left to a video, and the video is called Condo versus a House, First Time Homebuyer Options and Choices. Please check them out in case you want to consider whether a house is better for you or a condo is better for you. I will also have the link in the description. Another very important aspect of HOA is to find out how much is the insurance and how much are you responsible for. Each condominium units or townhouse units have a master policy that covers exterior and insurance and hazards, etc. But they also require you to buy interior insurance and additional insurance. So you want to find out how much is the coverage. Is there enough coverage if there's a fire or if there's a major leak? Is the insurance covered so that the HOA, when they fix it, have enough money, or the insurance will cover all of it as far as liability goes and cost of replacing and everything. And if not enough, you may want to buy extra coverage for yourself, including the exterior of your unit and the cost of items of your content in your unit. So always check the policies, or each unit or each community of HOA has different coverages, and you want to make sure that you are covered individually and as totally for other homeowners as well. So insurance coverage and enough coverage, liability and replacement cost are very important thing to look into. Social dynamics and management. When you get into these, check out how well managed the community is. Are they keeping up with the work on exterior? Are they painting it regularly? Are they checking for termites? Is the landscape being taken care of every week or every month? Are the trees trimmed? Because the value of your townhouse or unit is as good as the value of the curb appeal of the community. When I enter a community, is it nice? Is it a manicured, lawns manicured? Is the curb appeal nice? The painting is nice. The decks are well managed. This will affect your home value. Not only that, but if something needs repaired, you want to find out how responsive your management is. Some of the management companies are for-profit management companies now that manages the Homeowners Association, and some of them manage it well, some of them don't. I remember selling a townhouse 20 years ago, and we got a deal of a deal because the HOA were very high, and the property management company that managed the HOA were not doing a good job. So the decks were bad, the roofs were not fixed, the grasses were dry, and homeowners were complaining. They had bad reviews, so the prices dropped and dropped and dropped. So my clients got a very good deal until after 4 or 5 years they were sued by the Homeowners Association residents. They changed the property management company. Of course, they all had to pay fees for the lawsuit, and then after that the community grew, got better, year and the prices started going up. So the money that they spent with the attorneys checking out that management company really paid the price where the home values went up, and they recovered their money for the attorney fees and the hassle. The other thing is, how good is the resale value in that community? As I mentioned earlier, if the HOA is not maintaining the property, not painting, not fixing the roof, not doing the landscaping, not taking care of their homeowners, and there's less complaints, then the better the community is taken care of, the better resale value you will have. The other factor is, if there's too many tenants in the community, usually the tenants don't keep up the property as much as homeowners, so that may affect the value as well. As an example, when you get an FHA loan, which is a government loan, Federal Housing Administration loan, they look at how many tenants are there in the complex. If there are a lot of tenants, usually more than 50%, they may not give you the loan. So it's important to check out the landlord to tenant ratios, because it may be a community that you may not move into because there's more and more tenants coming in, and you have to wonder, why are the landlords moving out and renting it to tenants? Is the community going down? Or when it comes to buying a condo or townhouse, financing is very important. So one of the factors when you qualify in financing is your HOA fees. How much are the HOA fees, and are there any restrictions in the HOA? When it comes to financing, not only do you have to check the financing and the health of the HOA, but the lenders will check also. They check insurance coverage, insurance restrictions, HOA fees, the upkeep of the community. All these are important because appraisals will be done and affect on your financing as well. Finally, as I've mentioned earlier, you must check all the documents. Make sure it's have a legal representation. If you want to have an attorney check it, because you never know what's in there. There's a lot of rules and regulations and restrictions. Are there any assessments coming up? Are there any lawsuits? Are there any litigations going on? It's always a good idea to check with your neighbors. If you think about buying a condo or a townhouse, you may want to go to one of the board meetings if they allow as a guest, or talk to one of the board members who live in the community. Talk to the neighbors. Do they have any problems? Do they have any issues? Are there any issues coming up? And check all the legal documentation before you sign that contract. Because once you sign the contract, you're going to be stuck with it. And if there's any litigation, any lawsuits, any fee assessments or HOA increases, you're going to ride that higher ride with you and may not enjoy that. So maybe buying a house may be a better option, but at least now you know these tips. As I mentioned to earlier, please watch this video. It talks about whether to buy a house or a condo. It may give you some ideas. And thanks for watching.